So, if unless you've been living under a rock, then you're probably well aware that Bitcoin took a big hit recently. I mean, the decline that we're seeing is absolutely, shall we say, a little bit depressing. A little bit depressing, I'm sure, considering, oh, you gotta get into cryptocurrency. Everybody's talking. It's insane, the levels that things have gotten. I mean, you're talking about your barber, say, hey, should I get into cryptocurrency? Your Uber driver, your buddy who's never talked anything about finance at all now wants to all of a sudden, hey, should I invest in cryptocurrency? Well, right now, one second. Okay, so right now, things are looking a little bit scary. I got some charts here that I printed out to show you guys. So, take a look at this. This is Bitcoin, right? This is Bitcoin over the last year. As you can see, it's a sweet looking graph. In the 85% of this is pretty sweet. I mean, look at that. And I think it's interesting. It's good to look at, things from this scale, because Bitcoin has been highly volatile, right? It's going up, it's going down, it's sort of all over the place. But if you look at it from this scale of happening within the last year, it's really right now for the day trader and people who are perhaps emotional investors, shall we say, they would disagree, because obviously you see there's some dips in here, where it went up really high and it took significant drops and things like that. So those people have been, oh man, I lost money, whatever. But if you had pretty much bought, invested a lot of money in, let's say last March in Bitcoin, and just let it sit there. Look, even with the losses, look at where you'd be at. I mean, you're talking about, I can't see the numbers on this chart, but right around here, you're talking about maybe what, $50 or something like that for a Bitcoin, right? So say you invested $50 at that rate, right? Even with the drop, you're still at, I don't know what it's at right now. I think it's like 7,000 or something like that. I mean, that's pretty significant, right? So just simply holding it for all this time, think about the kind of money you could have made, right? However, let's talk about the elephant in the room. Oh man. So this is a perfect example of why, one of the sort of risks in investing, right? Look at that little kink at the bottom of where it really starts to rocket up, right? So you bought at that point. So I'm going to estimate, let's say that's about 55 there, right? So you buy in at 5,500 per Bitcoin, and it skyrockets up, approaching 20,000, and now it's potentially heading below where you purchased it. But you got to put that in context of, look at all those gains for it to go that high. I mean, it's like a roller coaster ride to go that high up, and we crashed, right? So that would not be very good, obviously. Now, let's look at Ethereum, which is another good contender to be looking at. I'm one-handed here, apologize. All right, so here we have Ethereum. As you can see, sort of a similar graph, similar experience. If you bought in really, you could have seen a rise all the way up 100, right? So that's pretty good. It started off kind of rough. volatility was pretty serious. Look at that spike in the beginning, right? So they just started getting some momentum, slow growth, right? Slow growth, and then all of a sudden, boom! Everyone's buying Ethereum, or at least the price is going up, right? But then it almost goes back as far as it went up, and in short order, right? The span of time between May and let's just say August, pretty much we're looking at almost a full reversal on the value, right? So that's pretty insane. But in general, it's just been going up, right? But once again, the pink elephant in the room. All right, so let's catch up to where we're at now. So the topic of this stream is this the time? Now, let's go back to the basic principles, which are basically, a lot of people get into emotional investing and things like that, and everyone's buying at the price. YouTube app crashing again. So let's get back to the fundamentals. Fundamentals of investing, fundamentals of trading, right? You buy low, you sell high. It's not rocket science. It's a pretty much fundamental principle of not even trading. Well, yes, trading, but I'm not talking about financial. Just in general, sales, right? Transactions. Obviously, I want to get the lowest possible price, right? If I'm going to sell a car, if I have a car that I'm trying to sell, obviously I want to sell it for the highest possible price, right? So let's look at some seasonal things that happen with we'll stick with vehicles, right? So during the winter times of the year, a lot of people are not really looking to, well, let's focus on a type of vehicle. So let's talk about sports cars and motorcycles, right? High performance vehicles. During the winter time of the year, people are not really focused on purchasing new motorcycles or high performance vehicles, right? Sports cars, things like that. The weather's not conducive to that. You get a car with a lot of horsepower, a lot of performance. You can go around the corners really fast, sticks to the road. That's not really conducive with cold temperatures, right? Because you're not going to have traction, and then also it's damaging to the vehicle, the salt, and all that kind of stuff. So, in general, the value of those kinds of vehicles in the wintertime will go down. Right? Summertime, perfect weather. Nice and warm, that's where you can really have fun with these types of vehicles. So, to come out on top as a person who is looking to buy or sell a performance vehicle, clearly, if you're purely focused on to look for deals in the winter time in terms of to purchase, right? You are trying to, so someone else is trying to sell a high performance vehicle in a time where a lot of people are not looking to buy high performance vehicles, because what are you going to do with a sports car in the wintertime, right? So there's not a lot of demand, so therefore that's going to affect the price. So that's going to lower the price potentially, so that's a prime time to buy. When the market is struggling, people are not looking to buy these kinds of vehicles, so sellers are having trouble selling their vehicles, so therefore you can get them to get the price lower. Now, if you have a vehicle and you're looking to sell it and you want to get the highest value for it, then you want to probably sell it just before it's about to get to be summertime, right? Because that's about the time where people start thinking, oh, summertime's coming up, I want to get me some new wheels, that's a prime time for you to sell. So that's the idea. You'd want to buy in the wintertime when the price, sell in the summertime when the prices, or just before the summertime, right? Because by the time their vehicles, right, the highest demand will probably be just before. As people start thinking forward, they want to make sure that they have, by the time the summer, good weather starts up, they already have their new vehicle, right? They've gone through all the insurance and all the good stuff, right? So same thing here. A lot of people, and you got to think, one of the things about cryptocurrency, a lot of people who don't have any trading background have, sort of jumped on the bandwagon. Oh, look, people are getting rich, all these millionaires and billionaires, people making money. This is a way, double, the value is doubled. People are all excited about this stuff. And and don't really have an understanding of how this works, right? So is an opportune time to think about investing, because like we said, you want to buy low, sell high. The prices are going down, and I believe they will continue to go down, because again, you have a lot of people who do not know how this kind of stuff works, who are going to be basically driven by emotions, right? They're going to be scared. There's going to be panicking. Oh no, have you heard? Because think about this. If someone bought, a lot of money has been lost here. Someone just bought recently, right? Within the last month or so, they are looking at a serious losses, and maybe they've never done investing before, so they've never seen this kind of thing. Like, most people have never seen, like, let's say for example, you have $10,000 in your bank account, and all of a sudden you wake up one morning and it's like $2,000. I mean, that's not a normal thing for most people. Like, money doesn't just automatically disappear. Things happen, of course. You have a medical issue or something wrong with the house. You have to, we understand that, but the idea of nothing happening in terms of in your life, right? There's nothing broken. You didn't need money for something. The idea of an account balance just plummeting. You went to bed and it was at this level, and then you woke up in the morning and it's like, whoa, what's going on? Dropped by 60%, dropped by 50%. So a lot of these people who are not professionals, who don't have a background, who don't understand how this works, they're going to panic, and they're going to cause more panic, and more people will be going around talking like, this is where we're at right now. This is what is going to be happening. And I don't have any direct knowledge of this. This is just, I know how this stuff works. This is going to happen. People are, I'm sure, created, and they have this vision of like, oh, I'm going to be a millionaire. I'm going to have all this money. They see, oh, an 18-year-old millionaire. People, greed is a powerful motivator, man. So people are going to jump in and try to make all this money and not really thinking about what they're doing. They're going to overinvest, right? Whenever you're investing, you never invest more than you're willing to lose. Never invest more than you're willing to lose. Those of us who know how this works, that's how we invest. But when you have the average person doing it, they will, take a chance and gamble. And truth be told, no risk, no reward. The more risk you take, the more potential for a reward, right? But also for losses as well. So, truth be told, by them being aggressive, they do put themselves in a situation where they could make a lot of money, but there's significant risk of significant losses as well, right? So bottom line is, lots of fear, lots of panic, people selling, and this is probably what we're seeing, right? This is not a subtle drop, right? This is a drastic drop very quickly. So here's what you need to be thinking about. Let's get down to the details. So first of all, I will let you know that myself personally, I am currently looking for an While the masses are looking for an exit, I am looking for all this panic and people selling and running away, and I'm just smiling, and I'm just watching everybody be emotional, and I'm being strategic, and I am doing my analysis, historical analysis of the patterns of the price in the past, and trying to predict where things will go next. But the key factors that I'm thinking about, this is what I'm thinking about, because now that I am looking to put my own money into this new and highly volatile market, and volatility can be a good thing, but that's a topic for another day. Now that I'm looking to put my own money in there, I need to figure out certain principles. The principles that I need to figure out that are going to be challenging to figure out potentially is, what's the new bottom? That's what I'm worried about, right? People are scared, this thing is crashing, it's bubble, whatever. What I'm worried about is the new bottom. If you look at the graph, you can see the prices, right? But there's something there's different terminology. There's terminology like ceiling, floor, shelf, right? So the bottom means the price goes up, the price goes down. The price goes up, the price goes down. But what is your support and what is your resistance? Your support being generally if you were to make a graph showing and it's better, I'll do another live stream where I can show you guys what I'm doing visually. It's kind of difficult in this environment, but basically, if you were to draw a graph showing that zigzag line going up, going down, going up, going down, if you were to draw a line that goes from bottom to bottom, right? Price goes up, price goes down, price goes up, price goes down. Every time it goes down, keep going from down to support, right? So generally speaking, the price doesn't go any lower than that. Generally speaking, the maximum sort of gains that you can get would be on the opposite side, which is the ceiling, right? Whenever it goes up and it peaks, it doesn't generally go higher than a certain point. So the point is, here's the thing. Let's say that Bitcoin drops to, let's just say 6,000, right? The question will then be, is that the new support, where that's the low end of the range? Is that the new support if it goes down to 5,000? Or is that the new resistance? Resistance being the peak. That's a critical question to answer. If you see it drop to 5,000 and you assume, hey, this is the bottom, right? We've now found this is the new low for the stock. It's only going to go up from here. But if you're wrong, and that's actually the support, that means it's actually going to go even lower. So you buy in at 5,000, it's been going down, 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 then it settles at 5,000, and you think, oh, this is it, it hit the bottom. Now I'm going to come in and I'm going to make all this money because I'm going to get it as it fluctuates up, right? Whether it's a day trading strategy, whether I'm going to wait for a good day to basically exit my position and take my profits, or I'm going to hold it for a while and watch it grow. The problem is, you don't know if that's the bottom or that's the new ceiling. It could settle at 5,000 and then it could drop even further to maybe even 4,000. And then you realize that 5,000 was actually the new ceiling, right? So what could happen in that case is you're buying at 5,000 thinking that's the low. It drops to 4,000, right? So you already took a big loss. And then it goes back up to 4,500. You're still at a loss. It drops down to 43. You're still at a loss. It peaks up to 4,800. You're still at a loss, right? It drops back to 4,700. You're still at a loss, right? You bought high. You see, what you've got to understand. You know the concept people say that blue is the new black or something like that. So 5,000 could be the new point at which it is difficult for the price to go above. And if you buy in at that point, then you're going to be pretty much taking immediate losses, and you're going to be stuck without ability to make any profit for who knows how long. I mean, sometimes in that scenario, you can find yourself, depending on the stock. I mean, cryptocurrencies are way too volatile. I wouldn't expect this to happen with cryptocurrency, but definitely with equities, we've seen where years, even worst case scenario, years, a stock could be overvalued, right? And it's just rising and rising and rising and rising, overvalued, rising and rising and rising and rising. And then finally reality sets in to where, you know, the market realizes that this is an over stock and the price plummets and never, right? Imagine a stock shooting up to $800 per share, right? And you're like, oh, this is great, and it's going to keep going up, and it's like $800 a share, $850 a share, $860 a share. You're like, yeah, this is it. And you buy in at $860 a share. And then there's an adjustment where people are like, this is overvalued, man. And it drops to $400 a share and never comes close to the $800 or $700 a share for 2 years, 3 years, 4 years, 5 years. Maybe it never ever comes back, right? So you just lost. You will never regain the profits that you were planning on. I would say regaining, but you may not have ever gotten profits at all. You may have taken an immediate loss, and that was it. It was all downhill from there. So that is the risk in terms of figuring out what's the entry point. And that is the question that I'm going to be seeking to answer in the coming days or weeks, depending on how long this adjustment takes to come to its conclusion, right? So out and selling and and scaring other people and causing it to go lower and lower and lower and lower and lower. And I'm going to wait until it hits that point, and then I'm going to reassess and determine whether, you know, we're looking at a new resistance or are we looking at a new support. And depending on that, I may do my entrance at that point, or I may wait a little bit longer to see the price stabilize more. But that's where I'm at. Comment below, let me know what you guys are thinking. Are you already invested? You got involved in the hype and now you're really hurting? I would definitely, my recommendation, now I don't have any magic crystal ball, I can't tell. I would highly recommend that at a minimum, if you have any kind of significant position, that you consider closing out that position, not as a hype or emotional thing. It's just this decline is probably going to continue. That's the reality of it. It's probably going to continue. That's probably more emotional, because I was looking at buying recently, but I predicted there was way too much hype. It's just too much. Everyone's buying. I mean, it can't just keep going up and up and up and up and up like that, right? So, and there's got to be an adjustment period where everyone's buying into something, and oh, this is the thing. I'm gonna, you know, invest in this. Everyone's making money, right? And then there's a point where people calm down and settle down, and the price is gonna fall back, right? So I sort of, not specifically or directly, again, I don't have a crystal ball or anything, but I sort of predicted that now was a dangerous time to invest in cryptocurrency, because it was just too much. It was, you know, 50 cents invested. I got people in the car community investing. I mean, it's all over the place, right? So that was it's a weird thing, man. It's everyone's all excited and everyone's buying into something. You know, I mean, yeah, you can jump on the bandwagon and you can make great money with them, but you also got to consider, you know, how high is this thing going to go, right? Generally speaking, you want to buy into something before everyone's all over it, right? You want to be on the beginning, and you got to think, if it's gotten to the point where it's so like your barber is telling you about it. You know what I mean? Like that's at that point, you know, it's a little bit late to be making a move, right? A lot of time has occurred, a lot of hype has occurred, so it's a little bit late. You want to be investing before people even know about the thing, right? You got to be looking in the future. Like you're looking at something $30, $40, and you're speculating, and you say, man, based on this information, based on certain factors, I think this is the thing. This is gonna, and you see certain things happening. You're like, I see movement. I really think this is really gonna go really high, right? No one's really talking about it. It's not all over the news. It's not like your barber's talking about it, right? That's when you invest. That's when you jump in, right? And that's how people made their millions. Right? Not jumping on the bandwagon long after, you know, it's so oversaturated. Everyone's talking about it, right? So if you're gonna buy post-hype, which is where we're at right now, then you gotta be looking for that adjustment. Again, there's no magic formula to this, you know? It's not like there's like a rule and this is how. But this is, in my opinion, very sort of logical ways to strategize and plan your investing. So post-hype, you want to look for the price to be adjusted, right? Because hype is going to generally cause the price to go higher than it should go. Right, and you gotta also consider this, and I didn't talk about that, but there's more to it than that, because you gotta look at the news. Why is the price dropping? Right, there's certain things that are occurring that's causing the price to jump, but you have to also factor in the emotional factors here, and the level of, you know, people that don't have the background in any kind of trading or investing who are jumping in, a lot to react sort of in a very trigger happy manner, if you know what I mean. Anyway, I'm going to go and invest in some Victoria's Secret coins. Victoria's Secret has a new digital currency where I'm being silly. I'm being silly. Anyway, so on that note, I'll take a look at the chat, and then I'm going to end this live stream. It'll actually get me something to eat, which was the intention. But I thought I would do a quick live stream since I haven't done any live streams in a while. So let's see what's going on. So Nemo is out of that. I mean, certainly, if you, I'm on the wrong level. Certainly, you know, these are your assets. If you are holding on to any kind of cryptocurrencies, I mean, it's yours. If you mean in terms of liquidating. Pardon me. If you mean in terms of liquidating, then that's certainly something you can do. Obviously, again, it belongs to you. So I'm not sure if I'm reading the question correctly, but I mean, clearly you can convert your cryptocurrency into whatever currency you want, hence the rate. So you know, for every Bitcoin or whatever it is, how much US dollars you're going to get. On that note, I'm going to go get something to eat. Thanks for joining in, and until the next episode.